Do you know that very often big spikes which appear immediately after the news announcement are the result of 3 or 4 big orders? In a second or two, these big orders are filled and you see huge Marabuzo candle like this one on the screen. Well, the story goes that 80% of traders are losing money because big players and market makers mislead this 80% with all kinds of trading tricks, blah blah blah. But it's not that, my friend. Most traders lose money because they make wrong decisions. And the base of wrong decisions is fear. Well, whatever fear is that. Fear of opening too early or opening too late. Fear of losing your capital, your money. Fear of getting stopped. Or fear of leaving money and so on. Leaving money on the table, I mean. So all these fears are a result of our previous trading experiences and the activity of our logical mind. Many losing traders overanalyze the market, and even when one has a well-working trading strategy, he doesn't stick to the rules of his system, and at the end of the day, he's losing money. Good day to you, trader. This is Mario from Forex Otherway, the channel where you can find some out-of-the-box approach to the market. In today's video, I'm going to share with you how you can better trade by switching off your conscious mind on example of EURUSD chart. But this approach can be applied to any instrument on any market, so it might be useful for you as well if you don't trade EURUSD. So let's start the rock and roll, my friend. So, I've got in front of me EURUSD 4-hour chart with some vertical lines marked over here. As you can see, these lines are calculated on the base of the square of 9, and more precisely, the dates with these lines show over here are nothing else than the projection of the price from July 2019, and as you see, the dates show 2021. Today we are on Friday, August 20th, 2021. Oh, let me show you my Excel sheet. Alright, so let's go. It is over here. So based on the closing price on June 24, 2019, and the price converted in a special kind of conversion, whatever. Based on this date, I have calculated all these potential reversal points starting from October 2019, and trust me, most of these dates they work pretty well. So you might check them yourself, by the way. You'll be surprised how unbelievable results can the square of 9 offer you with such calculations. The formulas and the whole methodology I use for these calculations I share with my students, as you might have already known, during my private tutorial session via Skype, where I show step by step how to calculate these future potential turning reversal points or the future dates of potential tops and bottoms, as you see here on the screen. You'll find the details under this video. If you want to find more, drop me a line or check my website. I don't know if you agree with me, but the most difficult part of trading is entering the market on the right time. So the time is probably more important than the price we usually analyze. The price. When you look at this chart over here, when you look this huge red candles, this is a daily chart of Great British Pound USD. So when you see these huge candles, this just waterfall, would you enter the market here? It shows 19th of March 2020. I tell you, 90% of traders wouldn't. Why? Well, there's a strange coincidence that 91%, up to 91% of traders are losing on Forex market in a long run. Very strange coincidence, isn't it? So would you trade here? I bet you wouldn't. The word belongs to the braves, my friend. The word belongs to these who think in other way than the crowd. Look what happened if you entered the market at that date. You have probably already seen this candle, and you know what happened after that date. There was huge V-shaped recovery and big rally after that on Great British Pound USD, and not only that, basically all the share markets, as you remember from March 2020, they just got exploded into the space. So this is a Great British Pound USD, but let me show you what my Excel calculations of USD have shown me based on this date again, 24th of June 2019, where at that date an important top took place. So that price was important, converted in some formulas I use for it, converted into time, gives you some amazing results. So let me just show you what's going on over here. So over here we got the chart, and it says that on March 19, 2020 over here, the market is going to make a potential reversal point. And March 19, 2020 was right, where are we? Oh, sorry, we are Great British Pound USD. Here we go. All right, here's another forecast of mine over here made recently during one of my trainings. It has shown some interesting results as well. Doesn't matter. Let's go backwards. Let's go to the March 2020. This is the candle of 19. Look, it's over here. It's that one. It shows exactly at the end of the day the reversal started. You know, we had 2 more days over here, or 3 days. This 23rd, this 20th. So 19th was Thursday. And the market bottomed over here, yeah, and from here on started this V-shaped recovery. We got another date over here, like 28th of March, which was actually Saturday, I think, because this is 30th. Just let me zoom it in. This is 30th, and the previous candle is 27th, so that's shown the top, because 28 was Saturday. Usually the top or bottom occurs a day before, on Friday, with a short-term calculation. We got 5th of April, 14th of April, and so on. So we got 5th of April. Let me just show you. It's somewhere here. Is this one? Is 3rd. This is 6th. 5th was on Sunday, so Monday is the day when the market reversed. 14 is the next one, and so on and so on. So over here on what I've got here, this is 4-hour chart, and I just want to show you that it's really difficult to enter the market because of the fear. The fear is a horrible factor which affects our trading. You wouldn't sell here, would you? You wouldn't buy here, would you? 90% wouldn't. That's the reason why. And if you got a proven trading system and you got calculated a date, like I've got on a given date, the nearest date I've got it calculated, let me show you, 2021. We're on August 20th, so 25th of August 2021, which is Wednesday, I think. It's Wednesday, exactly. It's Wednesday, so we got a few days, 5 days to go. It shows me a potential reversal point, so I'm going to look to play against the market at that date. If I had the time, obviously, because I'm not trading every time I've got this signal. I check it in some other ways as well, but these details I just keep for my students. But as an idea, you know, we got the date somewhere in the future, and at that date, at the moment, we see the market is falling nicely, and we got another date, which is 25th of August. I might expect that the market will react somehow. Let me show you how I trade it, basically. When I've got the date calculated, like this one, let's say, yeah? Okay, let's set that the date calculated. What I do, I just enter the market. This is 4-hour chart, obviously. My calculations are made for daily chart, but on 4-hour chart, I try to find more detailed entry to the market, just 1200 hours, but if I entered even at 00 over here, so at this time I've got ATR here, which determines my stop loss and says 29 pips, so probably I would have entered here with 29 pips stop loss. Let me show you, would it be hit or not? Probably not, but it needs to be, obviously, during the night Europe time, GMT +2 time, where I live actually. Nothing happens on the market, and basically the first opening of the market is at 9 a.m. my time, so that's the time when the market should get entered. Probably entering here based on ATR as a stop loss, I would take 3-1, take profit from this point, which is 29 by 3, is 87 pips. It should be somewhere here around, so even the profit is bigger. So in this way, you can enter the market, and when you see the candles falling like here, predicting that it's the end of the world, and the market is falling lower and it's going to 0, and you got the date when you should enter the time, just enter the market, don't think about it, don't overanalyze. You got the system, it has to be worked in automatic mode. You just enter, don't think about it, forget it. Just the size of the position. Don't go all in with your trading capital, because it's not the best way. Divide it properly, use your 2% of your trading capital, or 3%, whatever you prefer, just to keep it on a safe side. So definitely you will do it. That's the way I trade. I'm entering the market when I got the time determined, and go against the market on 4-hour chart. Sometimes I check it even on 1-hour chart. So as you see, some of these points are pretty accurate. Some profits are too small. Obviously, if the market goes my way, I expect I move the stop loss to break even, just to avoid losing trades. Obviously, some trades I also lose as well. I used to lose most of my trades till I went to the psychological, I took some psychological session recommended by one of my friends. I didn't know it could affect trading so much. When I discovered the Gunn's methodology of using the square of 9, I don't know whether the Gunn was using, but the story goes he was using the square of 9 to determine turning points in the future. So I knew that already in 2006, and even 2 years later, I was still breaking even. It's just because of the psychological issues, all this different stuff. So it's very, very important thing. The biggest trader's enemy is the fear. In most of the times, the fear of being wrong, So this is very funny, but this is our logical mind which is disturbing our trading. Most of us don't accept lies, at least in my culture. Especially the lies to ourselves. We don't lie to ourselves, do we? Sometimes we do, but usually not. Our subconscious mind reacts immediately if we lie to ourselves. When you once make a mistake in your judgment about the market direction, listen carefully, this is very important. Once you made a mistake evaluating which way the market is going, your subconscious mind will make you to feel guilty as if you had lied to yourself. It's very tricky, it's very, very strange, very complex psychological process, but the result usually leads to fear in the future, leads to make the right decision the next time, You will be afraid of opening position because you'll be afraid of feeling pain as a result of lying to yourself. It's very strange, but it works exactly that way. That at least what your subconscious mind is telling you. So in trading, this is absolute disaster. From the other hand, how to avoid it? Well, it's very, very simple. When you just open your positions with a proven and tested trading system, whatever system is there, would it be a worse system in the world? So, if you execute your trading system automatically and don't overanalyze, would it be high, would it be low? Oh, what is this candle, the hanging man, the marabuzu, the dark cloud, all this funny stories, In this way, it just distort your trading decisions. So, if you do it automatically, would it be even, RSI or stochastic? I don't recommend anyone to trade indicators because they show the past. But whatever simple system you've got, you will succeed in the long term if you don't overanalyze it and you don't think about the eventual outcome, because the result. The system is already done, is proven, and it works. Because the story with the system, I'm talking about that, because the system is only 20% of success. 20% only, my friend. The remaining 80% of a success is trading psychology and money management. So just how to say that? As long as your return ratio is 2-to-1 or 3-to-1 or even more, you don't need to have a very high hit rate. So, if you got 3-to-1, if your hit rate is 30%, or if you manage to spot the reversal 3 out of 10 times, or if on every 10 entries you will be successful only 3 times, with a 3-to-1 return ratio, or in other words, if your profit is 3 times bigger than your stop loss, in a long term, you will be a winner and your account will grow because, 3-to-1, simply if you bet $1 each time, so only 3 times 3 in case of 3-to-1 profit, you got 9. So 3 profits of 3 is 9, and 7 losses of 1 is 7. 9 minus 7 is 2. So you'll be doing 20% on every 10 trades, statistically. So in this way, it's very simple. Just, money management, stop loss, and stuck to your trading strategy, methodology, whatever it is. So if you want to succeed in trading, trade on automatic mode and use only proper money management. Just forget about the fear and just do what you have to do. And bear in mind that losing is a part of this game called trading. So losing positions, it will happen, as Forrest Gump used to say, shit happens. So, losing is a part of this game, like in poker. The best successful poker players, they lose, 100 hands and they win 20 hands. And if they win the right hands and they bet properly on the right hands, they're making money. And, there are plenty of them which are making money, and trading is like a poker, is a game. And obviously, if you want to know how to determine future reversals based on the square of 9 principles, join my private tutorials training via Skype. Obviously, you don't have to. Your trading methodology might be enough to be on the green side of the market. So, thanks for watching. I hope this video was useful for you. I wish you green peeps. Take care of yourself and bye-bye.